Today is November 3, 2023. 10 of 11 sectors closed green. Real estate plus 2.35% led, and energy 1.01% lagged. Fox Factory FOXF closed lower by -27.11%. The UAW strike resulted in the company cutting its full-year sales guidance. Investors and traders appeared happy with Adita Medicine's added results and guidance, closing up plus 18.21% for the day to top off a weekly gain of plus 32.75%. Jobs numbers today showed that the U.S. labor market is showing signs of cooling, faster than an iced latte in a polar vortex. Analysts expected 180,000, but the number came in lower at 150,000, missing the mark like a North Korean rocket test. Healthcare and social assistance were the stars of the show, adding over 77,000 jobs, with ambulatory health care coming in with 32,000. If private education were lumped in, that number would jump to 89,000. And government employment puffed up its chest with 51,000 new gigs, hitting pre-pandemic levels. But it wasn't all standing ovations. Mining, logging, utilities, and retail trade added a measly 2,500 jobs. And information lost 90,000. While transportation and warehousing dropped over 12,000. Manufacturing took a nosedive, shedding 35,000 jobs, mostly thanks to strike action. But it's expected to rebound now that the United Auto Workers Union and Detroit's Big Three have shaken hands on a deal. The unemployment rate did a sneaky uptick to 3.9%, giving the Fed a reason to smile. The number of workers laid off rose by 92,000, making job security shaky. DraftKings is trimming the fat, slimming down to a 61-cent loss per share. A solid sprint from last year's $1 loss. Total revenue, $790 million in revenue. A 57% jump that's got investors doing the touchdown dance. Customer acquisition, they're reeling in the betters like a pro, with monthly unique payers spiking 40% year over year. Average revenue per user ARPU, each user is now worth $114 on average, up 14%. Expansion plays, with Kentucky in the pocket and Maine and North Carolina warming up. Market share mojo, DraftKings just outflanked FanDuel, seizing the throne with 31% of the online gambling kingdom. Revenue outlook, they're forecasting $3.67 billion to $3.72 billion for the fiscal year, and a cool $4.50 billion to $4.80 billion projected for 2024. If confidence were currency, DraftKings would be minting its own money. It's up plus 16.46% today and nearly plus 27% for the week. Warren Buffett is in love with Japan right now. Berkshire Hathaway veered off its usual US-centric course, striking investment gold in Japan, diving into Japan's low-interest rate waters. Berkshire borrowed yen cheaply to invest in dividend-rich trading houses, turning a $6 billion stake into a whopping $17 billion. Buffett himself praised the undervalued nature of Japan's markets at Berkshire's annual meeting, aligning perfectly with their long-term strategy. After a month of testimony, it only took the jury for hours to find Sam Bankman-Fried guilty on all 7 counts. His sentencing is scheduled for March 2024 and has facing a possibility of 100 years. To make a final point, U.S. Attorney Williams reminded the public that this case stands as a stark warning to the untouchable. Ford's back to cruising in the investment-grade lane, after S&P slapped a shiny BBB on its credit rating. This upgrade is sending positive shockwaves through the bond markets, with index funds adjusting and junk bond investors on the hunt for the next big winner. Ford's credit glow-up comes after a labor strike resolution and a fresh $2.75 billion bond issue that had investors lining up like it's Black Friday. Investment-grade bonds are seeing inflows. But will this be a smooth ride, or are there speed bumps ahead? The shipping titan Maersk is trimming its sails and crew, announcing a workforce reduction that'll see over 10,000 employees walk the plank. With the global trade winds dying down, Maersk's profits are expected to hit the shallow end of their forecast. Shares took a dive, dropping 18% to a 2-year low. The CEO is battening down the hatches, facing overcapacity and inflation head-on. But the market's as forgiving as a pirate with a grudge. Luxury home prices are up 9% to record third-quarter highs. The rich are dropping cash on these mansions, with 43% of luxury purchases made in cold, hard cash. Meanwhile, the non-luxury market is looking haggard, with a modest 3.3% increase. Supply is up in the high-end sector, while the rest of the market is tighter than a celebrity's Botox schedule. And in places like Tampa, luxury home sales are up nearly 36%. High mortgage rates, not a concern for the cash-rich elite. The Fed's reverse repo program, the financial world's favorite parking lot for cash, is seeing less action these days. As the Fed pulls back on its pandemic generosity, the reverse repo's dwindling numbers are the tea leaves some are reading to predict the end of the bond drawdown bash. But with bank reserves playing it cool, the Fed's got its work cut out in figuring out when to call it a day on its balance sheet slimming regime.